Okay, Michelle, I think we're ready to start.
Perfect. Thanks, Dobby.
Sure.
All right, so I'm sure a few more people will be joining in over the next couple of minutes but let's get going. I don't want to keep anyone here too late this evening. So thank you so much for joining. I think we've got a really great group of people. I know it's quite a mix of people that are here. There's some colleagues, some of our clients, and then just people who have seen the adverts and the pamphlets that have been shared on social media. And there's also quite a few health professionals that have joined that are interested in figuring out a little bit more about what this medical tax back really is, and hoping that perhaps this is something that their patients could benefit from as well. So we'll jump straight in. And before I hand over to Dobby, I just want to give a bit of an introduction. So I'm an occupational therapist and I work in the disability space, specifically in disability inclusion in the workplace. And I deal with people with medical conditions, from really mild conditions all the way to severe conditions that are affecting their ability to work and function. And when I started looking into this topic of medical tax back and, having discussions with Yuda, and I was so interested and I was so intrigued about, why don't more people know about this? And Shema, I interrogated him for like an entire hour on, how does this work? And like, why are people not claiming this? So many people that I've dealt with over the years of my 20 years of working with people with disabilities and medical conditions could have benefited from this, but they just didn't know about it. And I really hope that tonight's session just gives you a lot more information on what medical tax back is, how the process works, whether or not you might benefit from it, and yeah, it gives you the opportunity to actually claim back if you do meet the criteria. And while thinking about it, I think the things that came up for me that might actually be limiting people's knowledge or ability to actually figure out more about this. Number one is that people just don't know that they are a person with a disability. And I think that's a huge, huge problem, is people believe that someone with a disability is somebody who's in a wheelchair or somebody who is visually impaired and has a guide dog and a cane, but they don't necessarily think that they would qualify if they have depression or anxiety, or if they've got diabetes, or if their child has ADHD. They kind of think, well, it's a medical condition, but not necessarily a disability. So we wouldn't, be eligible for something like this. But when you look at the stats, the World Health Organization stats are saying that 1 in 6 people across the world have a disability. And the recent stats released in the USA are saying that 1 in 4 people have a disability. So when you think about that and you look at the number of people that are on this call, a quarter of the people in this webinar actually have a disability. And you think about the people in your office, or the people around you in a shopping center, a quarter of those people potentially have a disability. That's much more prevalent than we think or we know. And 80% of these people with disabilities actually have invisible disabilities. So that's why when you walk through a shopping center, it's so rare to see someone who looks like they have a disability, because most people have something that they're dealing with that's affecting them, but you can't actually see from the outside. They look like everyone else from the outside. So I think that's something that's just so important to know. And that, when you worried about stigma or misconceptions or something like that, it's really common. And very often you might just have thought that you had a medical condition, but you actually meet the criteria and can benefit from some of the tax back and those kind of things. So yeah, just a bit of insight on that and some background and some stats. And then secondly, I think the biggest thing really is that people just don't understand the process. They don't understand the benefits. They don't understand the criteria as to decide who would and wouldn't meet, that SARS definition. So I think that's something that really is limiting people as well in actually claiming the medical tax back that they are eligible for. And I think Dovi's going to go into that in a lot more detail. I won't even attempt. I think he's definitely the expert, but I'm so excited that we're able to share this information with you, give you insight into what you could potentially benefit from claiming medical tax back, and just a little bit of knowledge around how the process works, who is eligible, and yeah, how you would go about doing that. So thanks for joining. I'll hand over to Dovi, and yeah, he'll take it from there.
Thank you so much, Michelle. Thank you for that introduction. And It's been a pleasure working with you. And I need to thank you, Huda, my partner, who's been working with you hands on. But the information he's fed to me is that you much more than an occupational therapist. You're a businesswoman, you're a visionary, and you're just out there to help fellow South Africans, which is massive. And it's been a privilege to partner together with you and share my knowledge that I'm so passionate about. I've across this both in my financial journey. I'm a financial person, as well as in my personal journey, my personal life. Um, thank God I know I do look young, but I've already on my fourth baby and the last one came last week. So, we're very familiar with all the different things that people come with, and some of them are struggling with word retrieval, others are struggling with neurodiversity, and all these things come with limitations, which can often result in costs. And if there's any financial relief around it, whether you an adult or a parent supporting a child or anything really, um, medical spend can often be very costly, and if you can access funds to help relieve that cost, that's really a massive benefit. So I'm really excited to share my knowledge on this topic tonight. And please, as I go through, you can share questions in the chat. Um, Myself, Michelle, and Yoda are going to try to get through a lot of the questions together. Michelle, already you can start looking at the questions and just point out the ones that you feel are most relevant. And yeah, we're not going to get through everything tonight, but we'll hopefully get through a lot. So we're going to discuss what you can claim, who qualifies, and how at Stratfin we help families with these claims. Just a little bit about Stratfin. So Stratfin, we are a tax solution company very focused on what our director calls abnormal taxes. We actually try to stay away from regular taxes because we find that boring. But the abnormal taxes is something that we're really excited about, and we've got different angles, whether it's in payroll or for company taxes, and on the individual tax. There's many different angles that people look at. They look at the retirement annuity, they look at their Section 18As for PBO charities, public benefit organization charities, and an opportunity that people don't look at and very overlooked, and I think is a big mistake because whilst retirement annuities are amazing and Section 18As are great, not everyone has a luxury of a retirement annuity. Not everyone has a luxury of being able to give charity. And medical, for those incurring medical bills, and paying tax is always relevant. So I think it's a very overlooked topic, and we're going to discuss tonight. I'm going to discuss firstly medical rebates without disability, and then how disability really changes the game when it comes to these medical rebates. But even just understanding medical rebates without disability can save families tens of thousands of rands, and then with disability can just completely change the game and result in massive, massive refunds. So the theory of medical rebates, and if you do lose me in the theory and the thinking behind it, not to worry because your take homes will be very, very clear. I'll do my best to make it clear, and if you do get the back end and the theory, it's definitely a plus. So I'm going to kick off with that, and here it goes. What happens is any person in South Africa, taxpayer in South Africa, paying for medical aid at the end of the financial year can get a portion of that medical spend back. So how financial years work is they run between March and Feb. So the financial year we currently wrapping up is 2026 financial year. When you're doing your tax return, you're doing your 2026 tax return, and that starts with March 2025 and ends on the last day of Feb 2026. That's one financial period. A few months later, which is now July, August, you get opportunity to do a tax return, which means SARS will give you the opportunity to show them different medical bills. They'll give you a portion of that back, retirement annuities, and other things which go into a tax return. What SARS has started doing very recently is an auto assessment, and what it helped is that people don't need to do a tax return. SARS does it for them, and it's automatically assessed, and they give you and they give you what based on the information that they have, they give you something back, or in some cases you have to pay in if you have two jobs or different variables like that. But where things often get missed is the medical rebate, because especially if you're not working with a tax practitioner and you're being auto assessed, a medical rebate can be missed. So, whilst the medical aids are feeding information to SARS about your medical spend, oftentimes it can be missed. And where it's most often missed is actually um, when you have for example, um, you can have a stay-at-home mom, and the mom isn't a taxpayer, dad's a taxpayer. The main member of the medical aid is mom dealing with the admin, and then SARS are now feeding that medical aid tax certificate to the mom's profile on SARS. Mom's getting nothing back because she's not a taxpayer. Where if you just stop to say, 1 second, dad's the taxpayer, let's do the claim in dad's name, you can get a percentage of your medical spend back. So already the first take home is as follows. Make sure if you are a taxpayer and you are paying for medical bills, make sure that the medical aid tax certificate is in your name, and uh, and that way when the medical aid schemes are providing that information to SARS, you'll get a percentage of that back. Step two within that is, because the medical aid is always giving you something, because SARS is giving you back something based on your medical aid tax certificate. Super important to always submit everything to your medical aid. By doing so, the medical aid is essentially working as your medical logbook for all your medical spend. And now SARS will now have that information and will give you a percentage of that back. So this the second take home, which I'm mentioning, is that because you're getting a percentage back, make sure that you keep um, a very good file of all that spend. The easiest way to do that is by submitting that to the medical aid, and then even if they reject your claim, at least it will show as the out-of-pocket spend on your medical aid tax certificate, and then you'll get a percentage of that back. Number three is that in the event that you've split the medical aids between mom and dad, sometimes medical aid brokers advise to do so, which sometimes it can be of benefit. But when you do that, you need to make sure that the person paying for the medical aid is feeding that information to SARS to make sure that they can get a percentage of that back. And that's even if you're paying for your parents' medical aid or a child who's on their own plan. If you as a taxpayer are paying for that, you can get a percentage of that back. So yeah, I think I've simplified it quite a bit. It's broken up into two parts. One's a flat rate per member that's on a medical aid. Another one is based on how much money you've spent on the medical aid, whether the medical aid contribution or the out-of-pocket expenses. But there is a lot of variables within this where I've deliberately not mentioned what percentage you do get back because of all the variables which can affect that. And for example, how earners get less of a percentage back. So this is where disability tax becomes a game changer, especially in the higher earners, because that's where the law changes, and it doesn't. There's a flat rate irrespective of how much one earns. One will get a flat rate back, which we're going to go into in a moment. So before we go into what disabilities would before we go into how disability affects your medical rebate, I first want to discuss a few examples that, as Michelle mentioned, commonly people don't view uh, as a disability, but very much for SARS they can qualify as a disability. And before we go into examples, the rule of thumb is as follows: that if one is being impacted moderately, and when I say moderately, I'm saying that it does not need to be severely, and it also can't be mild. It needs to be on a moderate level. If one is impacted in their day-to-day life, whether socially or academically or in the workplace, moderately, that for SARS is considered a disability, and that's exactly as Michelle said. Why this is so uh, why 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 people are so uneducated in the space is because even accountants and even tax practitioners, when they look at the profile and they say, and SARS asks the question, is there someone disabled? Their knee-jerk reaction is, no, I would know if my client was in a wheelchair. I would know if my client's child was blind, you know, but they don't stop to say, well, maybe my client's child has got ADHD or anxiety or remedial learning. Maybe my client's spouse is suffering from anxiety. Maybe my client himself has got moderate to severe rheumatoid arthritis and can't walk long distances. And as the client of the accountant and the tax practitioner, you don't stop and talk to your financial person like as your therapist, so you don't bother to tell them about all your million problems that you're going through in a medical space. And you don't stop to tell them about your teenage daughter's anxiety and your uh, and your youngest child's word retrieval issues and etc etc etc. And that's where this opportunity gets completely missed because these conversations aren't being held. And this is specifically why I'm so passionate about this space um, because it's a topic that's so avoided and people don't talk about it. And if we can just share our knowledge, and even though not every example here is going to pertain to yourself, but it can pertain to your family or friend. So I'm going to go through it, and I'm just going to say that my medical knowledge is very limited, and maybe Michelle will jump in and help me out of here with more examples. But from my little understanding in the medical world, there's 6 categories that SARS recognize as disability. First one is intellectual, and this is where all remedial and other intellectual limitations can come in. People of lower IQ and examples like that. Vision, once again, it doesn't need to be someone who's blind with a stick. If someone is being limited and can't drive because of vision, and they've important to say that they've done their maximum rectification, they've gotten their pair of glasses, they've been to the optometrist, and they still are being limited in vision. Communication, yeah, you can have aparaxia, word retrieval, and really any block in communication where a person's not able to fully communicate themselves as another person would. And it's limiting them. They're not talking up in meetings, they're not talking up in the classroom, they're avoiding social interactions, and even something like a severe lisp, affecting a person in their communication, that could definitely qualify as a disability for SARS. Physical, you can have your sleep apnea, cancer, any mobility issue, even so I say, even if one does not need assistive devices, but can't walk long distances, that would qualify. Any limitation in one of your upper body limbs, that could qualify. I actually had someone ask me this morning, what about an amputation? I mean, you don't get more of a disability than that, but even this person was so unsure that that qualifies as disability. In your mental health category, okay, you have ADHD, anxiety, depression. Once again, it needs to be on a moderate to severe level. If it's on the level where you pop a pill and everything's fine and no one even knows, and you don't feel affected, then that obviously wouldn't qualify. And lastly, hearing, and this is the most black and white one because you either are missing decibels in your hearing or you're not. There's no like, it's not left up to your psychiatrist or psychologist to determine your anxiety or depression, how it's affecting you. So, yeah, Michelle, maybe you can just jump in over here and if there's any examples that you think I may have left out.
No, I think you've covered it quite comprehensively. But I think just to emphasize is that most of the medical conditions that are out there or the diagnoses that are out there would fit into one of these categories. So often people will speak to me and say, oh, what about diabetes? What about bipolar mood disorder? What about chronic back pain? Those things are all fitting into these categories. So typically, I would say if there's a medical diagnosis, it's likely that it would fit into one of these categories. And even if you're not 100% sure, I would still come forward and attempt the application, because if it is diagnosed by a doctor, it's very possible that it would be recognized by SARS.
Yeah, spot on. And I think that's even where I've often seen medical professionals who, they just see a disability form on their desk and they're like, no, you're not disabled. And instead of stopping and reading the fine print and understanding the form, like one of the things that the form references is the global assessment functionality, the GAF score. And and it says if you score 60 or below. The examples listed in the GAF score 60 or below is occasional panic attack, and like social withdrawals. You know what I'm saying? Like withdrawing from social environment. So it's not describing someone who is, completely disabled. It's talking about people very commonly which are just struggling with anxiety, which is a very, very real thing in today's day and age. So what happens is as follows. Once you have even one person, this is really where the magic comes in. So we've now understood what qualifies as disability, and you now can see that there's someone in the family, and even just one person in the family or yourself, which is likely falling into one of those categories. The following happens as a taxpayer. Number one is that instead of getting what is roughly about a 10% a 10% medical rebate on your medical aid spend, you can get back 33%. That's step one. That 33% is goes on every medical expense of the whole family. So you can have, let's say, a child with struggling with learning difficulty. That now unlocks a 33% rebate on the whole family's medical spend that the taxpayer is responsible for, and that's inclusive of the medical aid contribution. You're paying, let's just say, for example, in my family, you're paying 9,000 Rand a month for a hospital plan, and we don't get much back for it. That's 9,000 Rand times 12. That's roughly about 110,000 Rand a month. Sorry, annually. Thankfully, not a month. That we're spending on our Medicaid contribution. Then we've got my daughter's speech therapist, and that's every week, a week. That's another 4 grand a month. Then we've got my other boykies, occupational therapist. Maybe he's not good enough at soccer, but for whatever reason, they've decided that he needs to go to an occupational therapist. And he is very good at soccer, but that's not thanks to me, that's thanks to my wife. Um, but for whatever reason, different things that children are going through and they need different therapies. So, so now I'm able to get back 33% of the Medicaid contribution, 33% of every appointment that my daughter's going to, 33% of every appointment that my son's going to. And then when I need a new pair of glasses and the Medicaid is not covering for that as well, that's still a medical spend and I can get back 33% of that. So it's 33% of all your Medicaid contributions, all your out-of-pocket expenses, which is really a massive, massive game changer when you're trying to give yourself or your loved ones the best shot for the best medical treatment. Other examples. Hello. Sorry. I tried to hang up there. Um, so other examples that can qualify as a medical expense is remedial schooling, any institution, any if you need if someone in the family is in need of a scrub or facilitator in the classroom, or a caregiver, any sort of medical related expense. If the medical expense is related to the medical condition, that would get you 33% of that back. And just bear with me for 1 second. there's a bit of a complication, yeah, that you get 33% on everything that's on your medical aid tax certificate. And then if you want school fees to count as a medical condition, that's when it needs to be aligned with the child's medical diagnosis. Um, Yes, also travel, another thing, another one example which comes to mind. It's not pertinent for many, but for a lot of people which are traveling far distances for whatever medical condition. We're actually currently helping a client that's traveling, that's traveling to New York every 3 weeks on business class for certain chemo, cancer therapies is one of the trial people, but the expenses that he's going through is massive, and we can now claim back 33% of all of those travel expenses. But it doesn't need to be as big as that. It can even be any route that's more than 10 kilometers from your home, and you can get back 33% of the AA rate of your travel. Lastly, before we go to the Q&A, just what we do at Stratfin and how we help families. So what we've done is, because we really specialize in this area, there's certain things that we've worked out in terms of maximizing these refunds. And the most exciting thing that we managed to work out is how to successfully do a backdated claim. So many of you have already been auto assessed, accepted the auto assessment, or submitted your tax return, and definitely for year 25 and 24 and 23. But if you do come forward with a medical condition, that medical condition was around and pertinent for the last 3 years, we can do a backdated claim going back the last 3 years and picking up all the money that was left on the table. So what I often say to people is that within 6 to 8 weeks of engagement with us, you can walk away with, it's hard to give a number, but the claims that we're seeing is you can walk away with an additional 20, 30,000 rand per year, which comes to 60 to 90,000 rand with just the backdated claims before we even do the tax return for the year that we're in. The next thing we do is we have a very holistic approach. So we always look in where can we get the more favorable outcome. If we do the claim in mom's name, what would we get? If we do the claim in dad's name, what would we get? What will happen if we split it? Do the part of the claims in mom's name, part of the claims in dad's name? And wherever we can get the more favorable outcome, that's where we push. And oftentimes we'll reverse what happened in the one spouse's name if we can see we can get a more favorable outcome in the other spouse's name. So, and even like doing things like that, we've recovered for a specific client that comes to mind hundreds of thousands of rands just by reversing who the main member of the medical aid, who SARS thought was paying for the medical aid, and showing them who was really paying for it, and just changing around things like that. And then lastly, because the admin process can be quite daunting, and especially for those who aren't great at admin, like myself, and I'm sure many other people at this webinar, and even people who are good at admin, often when it comes to personal admin, it's just a disaster. So, you know, what we do is we assign a client manager to every one of our clients who's there to handhold, to put together that file, to direct them to the right documents, to put together that pre-fill that SARS form for the doctor, write a letter for the medical professional who's going to be signing off on the form, explaining what they're signing, and motivating that the doctor does sign it off, and then the submission to SARS. The submission to SARS can be very complicated. If you do it wrong, it can trigger an audit, which is probably everyone's biggest nightmare. And there's a lot of things which can go wrong. And when you, because we've really specialized in the space, we've worked out how to play that game with SARS to make sure that arrives on SARS's table for the first time correctly, so that it doesn't get rejected. Because once it gets rejected, it's very hard to come back from that. Then they start nitpicking on everything. And are all our claims accepted first time? Absolutely not. Is it really depends on whose desk it lands on at SARS. But then we play that ping pong with them, and we go back and forth. We've got a team of three CAs and three junior tax administrators just there playing ping pong with SARS all day, every day, until we get claims over the line. So it's our game, it's our passion, and if anyone would like our assistance, we do it at risk only. which means um, there's no upfront invoices. If we recover funds, the client keeps 80%, and then we'll invoice 20% of the recovered funds. So everyone's welcome to engage at no cost, and um, we pretty confident we will get those claims right, and when we do, that only then we'll invoice. So yeah, that's it from us. And really, we're there to help. We're there to make a difference. And even if you want to just talk to someone on the team um, for advice, and you would like to do the claim yourself, or your accountant would like to do it for you, what have you, you're welcome to talk to anyone on our team. We're very happy to assist, happy to help. There will be a WhatsApp which will go out after the webinar. You can follow the prompts there if you would like to be assisted. We will assist on first come, first served basis. It is tax season and we are struggling to keep up. So the sooner you do reply to the WhatsApp, the sooner you'll join the queue and will be helped. But we will get to everyone. It just may take an extra couple of days. And yeah, that's really it from me. Um, Michelle, anything that comes to mind before we look at the Q&A?
No, nothing from me at the moment.
Okay, great. Yura, anything that comes to your mind?
No, I think that was perfect, but I'm just looking at some of these questions here. If you're ready
Go
to
for
get
it. Maybe you
started.
can point out the very ready. Maybe you can point them out to me.
Yeah, so somebody asks, what if you don't have medical aid and you're paying for everything by cash? Does that qualify? Could you still claim back on that?
So the answer to that is 100% you can claim back. Obviously, the expenses that you having need to be significant to make the exercise of value because, when you doing these claims, they can be, just the admin part of it and the expertise which go into these claims. If you don't have big medical expenses, it often doesn't become worthwhile, but it definitely is worth a try. Like, everyone should take advantage of this benefit. We don't know how long this benefit will be around for. There's a lot of talk about nationalizing government health, and the first thing that will go to with nationalizing government health will be these these tax rebates around the medical schemes.
Okay, amazing. And then just another question I'm seeing here that looks quite relevant is, what happens if I haven't been keeping my receipts? How will I be able to claim back for all my expenses?
Excellent. So, having been keeping your receipts, if you have submitted to the medical aid, then the medical aid has those receipts. It's on your medical aid tax certificate, and that's honestly the best way. If you haven't done that either, then it's quite hard to retrieve. What you can do is you can download your statements for the year. You throw it at ChatGPT or Claude, and you ask them to point out every medical spend that and you can kind of get quite a comprehensive list from that. So you can pull it off your bank statements, which is basically also a receipt. But it can become quite challenging, and but at the same time you can get back on the medical aid itself. So don't make perfection an enemy of good. If you can get back something, it's better than nothing.
Okay, and then just yeah, another interesting question I saw here is, what if a child's older but still has to wear diapers because of their condition? Could we include that if they've kept all their receipts?
100%. So, yeah, 100%. There's no age limitation, and something like diapers is very relevant to many medical conditions, and really any spend that's related to a medical condition is a qualif is a spend that can be claimed.
Okay, fine. And then what if when I want to claim for school fees, what are they SARS looking for if they're going to accept this? If a child has a disability, when will they accept school fees and when won't they?
So they'll accept it if you do the work for them. What I mean by that is that if you have got the statements of accounts, you've got the letter from the school, you have the bank the bank statement showing that you've paid for it. You've done the calculation for them exactly what you've spent and therefore how much you want back. And then you really need to do everything for SARS. And then and then um, they hardly ever look at uh, they hardly ever look at the qualification of the school, and as long as the school on the internet is showing that they are catering uh, for not regular mainstream children, that's a qualifying medical that's a qualifying school from a medical point of view. And the other thing that they're looking for is a comparative school fee, which means as follows. They want to know which area you live in, and therefore, what school would you have sent your child to if you didn't have your child going to this remedial school? And therefore, if the remedial school is, let's say, 6,000 Rand a month, and the government school down the road is 1,000 Rand a month. So then they want to see, okay, fine, you've paid an extra 5,000 Rand. We'll now give you back 33% of that 5,000 Rand times 12, which is a 20,000 Rand rebate. But you'll have to show that to them. You'll have to explain to them exactly how you got to that calculation and why you are eligible for that claim, together with the RTRDD form. See, as I'm talking, I'm just thinking about all the information that they're looking for, and yeah, it really is quite comprehensive. But I think we've gotten the bulk of it.
Okay, amazing. And if we could just quickly do one or two more. Um,
Sure.
the question here is who classifies the what a moderate condition is? And I think if I could just expand on that a little bit, like how do I prove to SARS that I have the medical condition I say I have?
A brilliant question. And here it really boils down to the signature of a medical professional. One medical professional can sign off. It does depend on the on the diagnosis and what category you're applying under. So, for example, if you're applying under physical, then most often GP will be accepted. There are times when SARS come back and say no, they want a someone who specializes in the condition that the GP has signed off on, which actually isn't fair because by law, a GP can sign off even on mental health. Just as a GP in South Africa can medicate mental health, they also know how to sign off these forms for mental health. But what we've seen is that it often is rejected, and with SARS, you can try argue with SARS, but you'll come out second best, and you kind of just need to give them what they want. Um, and yeah, it does get hard because sometimes the medical professionals won't stop to educate themselves on what SARS are looking for. But ultimately, there's nothing a tax practitioner an individual can do if this doctor won't sign off a form. There's no way forward on the claim. We do have teams of psychologists that we do refer our clients to who have taken the time to educate themselves and do a full diagnosis and then to sign off the forms so that we can help with that as well.
Okay, thanks. And maybe we can just finish off with this one last question is what if I do want to do a backdated claim? How will I do it? Do I have to resubmit all my tax returns? Like how do I do it?
So, excellent question. It really depends on the tax profile and whether you submitted a tax return or whether it was an auto assessment on what the previous tax statuses are is how you need to dispute it. And it is important that you do it right because if you reopen it, you can find yourself in an audit which can become quite unfriendly. So you got to be careful what you're doing. But it's you follow the prompts on SARS and talk to someone who knows what they're doing before just going forward and playing and opening things that you are just happy are asleep. Mm.
Okay, thanks. Yeah, there is a few more, but if anybody has a question that wasn't answered in the session, you are welcome to message anyone on our team. And yeah, and we'll be happy to answer all your questions.
Amazing. Michelle, thank you for putting this together. Yoda, thank you for putting this together. It was really special.
Fantastic.
Okay,
Thanks so
thanks.
much, Javi. That was great.
Thank you.
Thank you.
Okay, good. Wishing everyone a good evening.
Thank
Thanks.
you.
Thank
Bye-bye.
you.
Take care. Bye-bye.